What's the mood on the market right now?
Well, look, I think if you take one step back from this historic and very interesting race, which looks like it's all about the path to the Electoral College, really what the market is focused on is the path to the COVID recovery. And, it looks like when you look at the futures, the way the NASDAQ is trading up and the Russell is trading down, the way that treasuries are moving, it looks like there's still a lot of faith that central bank support will continue to support risk assets, but that the recovery could be a little slower. And so the stay-at-home trade might be working a little better than some of the more cyclical stocks right now.
What do you do, though, if you focus on the election? What do you do with renminbi, and what do you do with other emerging currencies, such as, the Mexican peso?
I think that right now we're getting this dollar safety trade, but we really think over the medium term that will start to abate because the debt dynamics in the United States and the recovery paths for the United States are such that we think that China is a winner here. They are on a recovery path, and also Europe is going to be stronger. And so in that context, we would look to fade certain, over time especially, some of this dollar strength that we're seeing.
Mark, if we have a Joe Biden president with a Republican Senate, does it mean that we may get very little stimulus, if any at all?
I think that's one of the things that the market is looking at here is less stimulus than we would have had, less fiscal stimulus than we would have had in a blue wave or tax relief, perhaps under a Republican sweep. And so that's one of the factors that's playing in here. Now, all of that is based on what we thought that the campaigns were likely to do. But this is going to play out much more on what kind of a stimulus bill could get through, given whatever mix that we end up with.
Mark, as we move through this process, we have to look at the overall economies and the debt buildup that we've seen. Now, we don't know what the stimulus is going to be, et cetera, as well. But have you guys changed your view for 2021, given an electoral guess? Or are you frozen as an institution until you see the outcome?
I would say that the medium-term picture hasn't really changed that much. It's rare that an election in and of itself matters so much for what the markets are doing in the global sweep of the economy. And it looks like that is going to be less of a chance now, but when you look out to the middle of the year, we are looking at a world that is more digital, a world that is more indebted, a world that is more local, and the world overall is one that is moving more towards sustainable assets. So in that picture, things have not changed that much. The debt dynamic is not going to change however this outcome plays out, and therefore that's one of the reasons, if you are concerned about the debt side of the equation, that's why a dollar weakness is something to play into next year.